A warm wishes to all. In this video, I am going to explain Securities Exchange Board of India, which is shortly known as SEBI. Introduction. Securities and Exchange Board of India was first established in the year 1988 as a non-statutory body. That means it was not created by statute, we can say, only to regulate the securities market. But it was made as an autonomous body only by the Government of India on 12th May 1992 and has given statutory powers, with SEBI Act 1992 being passed by the Indian Parliament, we can say. Head office and branch. SEBI has its headquarters in business district of Bandra Kurla complex in Mumbai, and it has northern, eastern, southern and western regional offices in New Delhi, Kolkata, Chennai and Ahmedabad, we can say. Now let us see the organization structure of SEBI. The SEBI is managed by its members, which consist as follow. The head of the SEBI is director. Under his custody, additional directors, that is joint directors, and additional director administration and technical director joint director system, and deputy directors is under the custody of additional directors. Here deputy director administration is under the control of additional director, and assistant director under the control of deputy director, and section officers are under the control of assistant director, we can say. In technical director custody, we have deputy director system and assistant director system and technical assistants, we can say. Now let us see the objectives of the SEBI. First one is regulation of stock exchange. The main objective of SEBI is only to regulate the stock exchanges so that efficient services may be provided to the parties, we can say. Second heading is protection to the investors. Suppose if there is no investors, means there is no capital market, we can say. So the main important purpose of SEBI is only to protect the interest of the investors, we can say. So how they can protect means they will check whether the companies are giving wrong information in their prospectus, and thereby they can reduce the risk of delivery and payment, etc. So the main objective of SEBI is to provide security to the investors only, we can say. Next one is checking the insider trading. Insider trading means buying and selling of securities by the promoters and directors. Actually, the promoters and the directors, they have some confidential matters about the company. In that case, these persons may take advantage by affecting the interest of the general investors. So it is very necessary for the SEBI to check whether any insider trading is done on stock exchanges. Next one is control over brokers. The main important motivation is to supervise the activities of the brokers, we can say, because they only dominate the capital market. So to regulate their activities, it is very necessary to establish the SEBI. Now let us see the functions of the SEBI. First, the main motivation of the SEBI is to safeguard the interest of the investors. How they can safeguard? By providing adequate education and guidance to the investors. In that case, the SEBI makes no rules and regulations which must be followed by the financial intermediaries like portfolio exchanges or underwriters or merchant bankers, and then underwriters, merchant bankers, etc. It takes care of the complaints received from the investors. For example, they issue booklets for the information which can be given to the small investors. And then secondly, they regulate and control the business of the stock markets. So in that case, they will make registration compulsory to the brokers. They have to follow the rules and regulations prescribed by SEBI, we can say. And then the SEBI they conduct inspection and inquiries of the stock exchanges, and whoever that connected, that is intermediaries, and then they will take appropriate measures wherever they require. This function is carried out only to check the working of the stock exchanges and the intermediaries, we can say. And then mainly it aims at protect the insider trading in securities, and also it prohibits any unfair trading methods may be done by the financial intermediaries by operating in the securities market, that is stock exchanges, we can say. Then the SEBI know it register and control the functioning of the stockbrokers, sub-brokers, bankers, even the trustees or investment advisors, whoever is connected with the securities market in any manner. Then the SEBI know it issues guidelines and instructions to the business concerns regarding the capital issues, and it also provides separate guidelines to be followed by the listed companies, we can say. And it also conducts research and publishes information which is beneficial to the buyers and the sellers, we can say. The SEBI next regulates the mergers and acquisitions. Mergers means two or more companies can combine together and start functioning. Acquisition means one company may take over the another company. So these mergers and acquisitions may affect the interest of the investors. So for this purpose, the SEBI has provided appropriate guidelines only with the intention to regulate the working of these companies, thereby protecting the interest of the investors, we can say. And then the SEBI register and control the functioning of the collective investment schemes like mutual funds, Paraspara Nidhi Nirvanangal. So in that case, it has created regulations and guidelines which must be followed by the mutual funds. The aim is to have effective supervision in order to avoid the unfair trade practices. Next, the SEBI promotes self-regulatory organization of intermediaries, because it is said self-regulation is more preferable than external regulation, we can say. So the SEBI know they motivate the financial intermediaries so that any harmful actions may be done against the members may be protected by the SEBI. So they can use powers in order to protect the investors, we can say. And then the SEBI carry out the steps wherever it is needed in order to provide full accommodation to the capital markets, we can say. Then the SEBI provide appropriate training to the financial intermediaries, because this is the very important to have a healthy environment for the stock markets in order to protect the investors, we can say. The SEBI also charges fees wherever required, and whatever the work assigned by the central government, it may be carried out only by the SEBI, we can say. Now let us see the powers of the SEBI. First one is powers relating to stock exchanges and intermediaries. The SEBI has wide powers regarding the stock exchanges and intermediaries whoever deal in securities market, we can say. In that case, he asks information to be provided by the stock exchanges regarding the business transactions. Thereby, they check and supervise the stock exchanges. Next one is power to impose monetary penalties. Suppose sometimes the SEBI know it is empowered to provide monetary penalties for the stock market and whoever participated in the stock exchanges for any violated actions done by these securities market. So in that case, sometimes it may provide suspension order for a short-term period also. Next one is power to initiate actions in functions assigned. So whatever the functions assigned to the SEBI, it has the power to initiate actions. For example, sometimes it can issue guidelines to different intermediaries and also introduce specific rules to be followed in order to protect the interest of investors, we can say. Next one is power to regulate insider trading. Sometimes the SEBI has the power to regulate the insider trading, we can say, in order to regulate the functions of the merchant bankers, we can say. And then pass under Securities Contract Act. As per the Securities Contract Act, that is issued by the Ministry of Finance. Notification has been issued on 13 September 1994, that is by delegating several powers to the SEBI. In that case, it is also empowered by the Finance Ministry to nominate 3 members on the working of the governing body of every stock exchange. Then, power to regulate business of stock exchanges. The SEBI has the power to regulate the business of the stock exchanges or intermediaries, those who are associated with the securities market, as well as the mutual funds, or any fraudulent or unfair trade practices related to the securities can be checked by the SEBI. So in that case, there may not be any acquisition of shares or takeover of the companies from one company to another company, we can say. Now, let us see dematerialization. What is meant by dematerialization? It is the process by which any physical share certificate of an investor can be taken by the company or registered and destroyed. So in that case, an equivalent number of securities in electronic form may be credited to the investor's account with this deposit. Dematerialization actually means, suppose if any person holds 1000 shares worth of rupees 10 lakh. In that case, he has share certificate worth of rupees 10 lakh. But in case of dematerialization, these share certificates may be taken back by the company and may be destroyed. For that purpose, an equivalent number of securities in electronic form worth rupees 10 lakh may be credited to the investor's account with his depository participant, we can say. Actually, this trading in dematerialization shares has been commenced on the National Stock Exchange only in December 1996. Here, the Reliance Industries was the first company to trade its 100 shares in dematerialized form, we can say. But in case of Bombay Stock Exchange, this dematerialization of shares has been commenced only from the year December 1997. Now, let us see what are the benefits of dematerialization. Because of dematerialization, the share value are completely secured and it has provided high trading efficiency and more online trading facilities can be done in case of dematerialization, and the shares are automatically updated and the shares are deposited in a common bank, we can say, and it involves only low cost of a transaction and all the shares may be held under single account, and moreover the customer services are provided by the bank, and also the holders can take loan against the securities also. Now let us see the depository participant. Actually, who is a depository participant? He is an agent of the depository, we can say. So he acts as an intermediary between the depository and the investors. So this relationship between the depository participant and the depository is actually governed by an agreement, we can say, under the Depositories Act. In a strictly legal sense, the depository participant is registered under the provisions of the Act regulated by the SEBI Act. So, as per the provisions of the Act, depository participant can also provide depository related services only after getting certificate of registration from SEBI. Let us conclude up to this. Have a nice day.